Okay, everybody. Conan and I are running in different directions this weekend, and so I'm going to be recording the show on my own, so kind of bear with me here as we go through it. We're not going to get the typical banter we have back and forth, but I got some really good stuff to put out on the show, so hopefully you guys enjoy it. All right, the TSP Update Show, 10 October 2021. Market this week was kind of a stabilizing week for the stock funds. C fund was up almost 0.8%. S fund pretty much flat. I fund down about a quarter point, and the F fund was the big loser, down 0.76%. All right, so this week on the show, we got a few different interesting things. Mr. Gox is a hamster from Germany that was introduced to me from a special friend of the show. And we're going to take a look at Mr. Gox and how he picks his stocks. And it kind of validates at the end one of the core Investors Business Daily principles. So we'll get into that. We'll take a look at some of the bottoming patterns that may or may not play out as we take a look at the four leg that we're in right now. And we'll look at the big picture Elliott Wave count. The bonus chart is going to be VXF. It's a chart of financial services industry. And then we're going to do not the 20-month weekly charts, but the 3-year weekly charts. Okay. Investing is so easy, a hamster can do it, right? This was from morningbrew.com article that was forwarded over to me. Mr. Gox is a hamster that Max Noblock put up on his Twitter account here. So here's what happens. Star investor turning heads in the world of crypto. So Mr. Gox, a hamster, has been basically picking stocks since June, and his stock picks in the crypto space are outperforming Warren Buffett, Berkshire Hathaway, Bitcoin, and the S&P 500 as a whole. So you can go through and read the whole article. It's pretty comical. Not the first time that this concept of kind of throwing darts at a board has come up. A Random Walk Down Wall Street was written back in '73 with the idea that you blindfold a monkey throwing darts and he can do just as well as a professional trader on Wall Street. The interesting thing about this is the universe of potential picks within the Bitcoin space that Mr. Gox could have selected from. So when you look at this, the entire universe, except for the CEL down there on the far right, every other Bitcoin asset that Mr. Gox had to choose from outperformed the S&P 500 over the past 90 days, which would be since June. So while it's kind of interesting as a headline, the bottom line is this. If you, the first thing to do is to make sure that the current market direction is up. The second thing to do is pick the best sector within the overall market. And then the third thing to do is pick the best stocks within that sector. So in this case, Mr. Gox got to pick from the stocks within the crypto sector where the sector itself was outperforming the S&P 500. So the bottom line is the IBD, Investors Business Daily way of selecting stocks is we have the market pulse, which we've been talking about for the last few weeks, either markets in confirmed uptrend, markets in correction, or markets under pressure. Those are the three categories of the market pulse. So if the market's in an uptrend, then you're looking for the sectors within the overall stock market that are outperforming the S&P 500, which in this case was the crypto sector. And then you're looking for the best performing companies within that sector, which in this case would have been all these. So anywhere in here, though, throwing darts, you would have done pretty well. Okay. Bottoming patterns. Had a lot of requests to talk through some bottoming patterns. We've had a lot of experience over the past couple of years with the V bottom. Haven't seen too much double bottom and haven't seen a whole lot of rounded bottom, but we're going to go through a couple of examples of each of these, give you guys some things to think about as this four leg continues down. So the V bottom is really the crux or the foundation of the whole kind of bottoming process. If it's an actual V bottom, then the pattern kind of looks like this, right? The market comes down, hits a low, comes back up. If it gets, so let's see. Say the market comes down, goes a little sideways, and then breaks down. Comes back up, gets above this neckline, comes back and tests it. This is the best time to buy it, right? It's broken through this resistance that it had here on the downside. Resistance here, came back, tested it, and it's likely to go higher. The target in that case is from the top of the neckline to the bottom of the V. You'd expect the price to get up from the neckline to the same distance. So the distance from the neckline to the bottom of the V should be the same distance as the neckline to your first price target up here. All right, so that's the idea in theory. So how does it generally, it plays out as you look at some of these examples. Let's see, where's a good one? So the market came up, hit a top, came down, corrected, came down, gave us a V bottom. So now we have the prior top, draw the trend line, broke through the prior top. And so there's where the first target zone was right there, okay? You can look at some of these other patterns, same kind of thing. Market comes up, comes down, corrects, comes down, gives us the V bottom, draw the neckline, and there's our price target, because that is the distance from here, same distance to there. So that's how the V bottom works. The problem with it, obviously, is that if you only use the V bottom as your trading methodology, you have to allow for a beginning of a neckline, the whole move down, and the whole move back up to where you were before you get back in. So that's the big downside of a V bottom. That's if you are only, if that's your only methodology of trading it. When you throw in trend lines, moving average lines, and other things, the idea is that you would get closer, get in sooner. So in this case, yeah, the market was coming up above this moving day average, came down below it, did a V bottom, and then tested that moving average line here. So maybe you got back in here on that moving average line test, right? That's why we have multiple layers of tools in the toolbox instead of using just one. But that's how a V bottom would work. All right, a double bottom. So a double bottom starts off as a failed V pattern, right? Market comes down, we get some resistance here, comes down to a bottom of a V, comes back up to the neckline, but can't get back above it. Comes back down all the way to the bottom of the prior V, comes back up, gets a little churning, and then finally we get back above it. Sorry if you can hear that noise in the background. I'm outside while I'm recording this. All right, so we get some churning here and we get back above it. That's basically how a double bottom works. It's a failed V pattern. A rounded bottom is same kind of thing. The market comes down, makes an attempted V, fails, comes back up, fails, but each low is lower. Each low is lower, and then you get the bottom to form, and then the lows become higher. So it creates this rounded bottom, right? No matter how it ultimately plays out, it all starts with some kind of V, which fails in one way or another to continue to create this pattern. And then at some point, whether you call the neckline up here, right, which in this case you had the churning here, V came down, came back up, and the churning here, and this was really the most conservative place to get back in. Or if you looked at it and said, okay, maybe it's a cup and a handle. Here's the cup, here's the handle, big explosive up move off the handle. That's a pretty good place to get back in on this chart. But these are sort of examples of how you have to think about the patterns. It's much more important to look at the pattern evolving and start to see it and practice looking at different patterns. It's much more important to see what's happening rather than try to label the chart as, okay, this is a V, this is a double bottom, this is a triple bottom, this is a rounded bottom. You want to just see the price movement starts turning in the up direction. And when you get a breakout day, that's when you get back in. And it doesn't matter if it's indexes or stocks or the TSP funds. They all work the same. Okay, so if we get back to where we are in TSP, we've been talking about this particular link for the last few weeks. Everything you want to know about Elliott Wave, Fibonacci's, how they interrelate. It's a great link. So we've been looking at this 14-year monthly chart. This is the big bull market that we've been in since the low in 2009. It's been playing out in 5 waves, 1, 2, 3, 4, 5. We are somewhere in that 5th leg right now, and we don't know how high the 5 leg will go. We do know this. The 5 leg, which starts at the bottom of the 4 and goes to wherever the top of the 5 is going to be, there are no guarantees that this 5 leg plays out in 5 legs. That's our expectation right now, and that's what we're working with, but there are no guarantees. So at any time, the market can start rolling back over, right? So it's something to keep in mind. I'm not saying that we're at a top right now and the market's going to start rolling over. I'm saying there are no guarantees that this 5th leg plays out in its own 5 legs, although it does look like it's doing that. So if we zoom in a little bit, this is the 5th leg that we were looking at. And here is where we are right now. We are waiting to see, we're expecting that the 5th leg actually does play out in 5 legs. And so we're waiting to see where the 4 completes. At this point, ideally, we would have another couple of weeks of some kind of movement to give us the same kind of time frame that we had on the 2 leg as the 4 leg. If you look at the chart, just kind of on the face of it, you can see we got quite a bit of churning, which would turn into support here at somewhere in the 4,200 neighborhood. So we're still a little bit above that. It wouldn't surprise me over the next couple of weeks to see us get down to 4,200. If we got past 4,200, there's some more churning in here on a weekly basis. So we could still, we could definitely still come down from here. But my plan A right now is whenever the 4 leg does bottom, we get some kind of 5 to complete this whole cycle. So in the big picture, that's how it should look. All right, bonus chart is XLF. XLF is financial. So Berkshire Hathaway, JP Morgan, Bank of America, and Wells Fargo are the biggest contributors to the financial select sector. XLF is the ticker symbol. So why I wanted to put this up was it's a great example of a consolidation pattern. Let's just call it a consolidation pattern. So some people might say, is this a double bottom? Right? It was a failed V, right? We came down, came back up, hit the 50-day moving average, consolidated a little bit, came back down, did a double bottom, hit the 50-day moving average, and then gapped up above the 50-day right there. So not a bad time to buy it there if you were being pretty aggressive. Price comes up, gets higher than the prior high, comes back down, tests that 50-day again, comes back up for a double top, comes back down, does a break through that 50-day, right? So that's kind of a one-off. But in general, the XLF is holding above its 50-day moving average line. And really, the 39 level is going to be the breakout. So a good indicator on here, we got a lot of positive volume in the past month. We got a couple of days of pretty big negative volume, but we got a lot of positive volume in the last month. And this indicator down here is the XLF versus the S&P 500 or the C fund. So when the indicator is moving up, it means the XLF is outperforming the C fund. So you definitely want to get into stocks, or in our case, you want to be in one of the three TSP stock funds that are doing better than the others. So you compare those funds to the C fund, and you want to be in the ones that have an up angle like that, because it means those ones are outperforming the C fund. All right, so what we're looking for here in the XLF, a good solid break above that 39 level, and XLF should be off and running. If we're not, well, if and when we get that fifth leg on the C fund, it needs to be supported, if not led, by financials. So hopefully this is the break we get this week, and C fund maybe continues a little bit lower, but if XLF does a big breakout to the upside, the C fund should certainly follow. All right, TSP fund charts. So in a 3-year basis, we've been looking at 18-month to 20-month weekly charts, but I wanted to broaden it out this week and give a little bit of perspective. So the blue line is the 50-week moving average. The red line is the 10-week moving average. They correspond roughly to the 50-day and the 200-day. So the reason I wanted to do that, you can see back here, we haven't been down here in the area of the 50-week moving average in almost 2 years, right? But you can see that it's frequently a support level. Okay, the fact that we haven't been down there in a while doesn't mean that the price isn't down there often. So at some point, it's not an if, it's a when. At some point, we're going to get down and at least test this 50-week moving average line. So it may not be on this 4-leg. We may not get down this far to like 4,000 before we go higher, but it's something to keep in mind. And also on a weekly basis, you can see the indicators have clearly rolled over, and they have a lot more room to go down before they get oversold. So I'm optimistic in the relatively long run that we get a move higher to the upside. If we got to close below this 200-week moving average, or sorry, 50-week moving average, that would be a trend change in a much bigger scale. So we'll worry about that if and when we get to it. But for right now, just keep in mind that we could absolutely come down to this 4,000 level and then still move higher. If and when that happened, we would see the indicators would all come down and then move higher, down, right? Okay. So the S fund, we talked about this last week or the week before. The S fund has been moving sideways for almost this whole year, which gave time for the 50-week moving average line to catch up. So the S fund looks like it wants to find support there. We could have still a little bit of a dip, a test down all the way to that line, and then maybe a breakout to the upside. I mean, we're still, this should be a continuation pattern. We had a big bottom here. We had one move higher, consolidation. The next move should be higher out of this. In terms of the indicators, they've been moving steadily lower, right? Since the high back here in February. So when this thing does finally break out, there's no guarantees it breaks out to the upside, but when it does finally break out, it should break out to the upside, and it should be an explosive breakout because we have all this pent up energy in here. Okay. iFund is looking a little bit trickier. Definitely looks like it got support and reversed off its 50-week moving average this week. Indicators are still trending down for the I funds. So we definitely haven't reversed in terms on a weekly basis in terms of the indicators, but this could be a pretty significant low for the I fund. We have to kind of let it play out a little bit. The reason I say it's tricky is because you got this high, you have a higher high here, you have this low, and you have a lower low here. So there's not enough data really to kind of form any patterns, but you don't like to see cones going out like that. It makes it very difficult to trade. So we're gonna have to give it a few weeks to play out and see how it goes. F fund clearly below its 50-week moving average line. It was a tough week for the F fund this week. We got 3 weeks of consistent, pretty high negative volume. RSI still has room to go lower, but it's clearly rolled over. MACD turned negative. Slow stochastic has room to move down, but F fund is not looking good at all. So if I was not in the stock funds, I would not be in the F fund either. The G fund is really the only place to be if you're trying to protect your TSP account at this point. Okay. Got to apologize for the kind of craziness that we had this week. We put out a bunch of good information, did some Facebook Lives. And so if you have questions, hit us up on email, Facebook, whatever. And we will be back in the podcast studio next week. So hope you guys have a great week. That's all I got. Take care.